The Dictionary of Real Estate Appraisal, page 178. Chapter P continued. Profitability Index. The acronym is PI. The present value of anticipated investment returns, which are benefits, divided by the present value of the capital outlay, which is cost, also called benefit-cost ratio. Profit and loss P&L statement. See operating statement. Profit incentive. The desire to work or to create a business for financial gain, also called profit motive. See also entrepreneurial incentive. Pro forma. A projected income and expense statement for proposed development. See also reconstructed operating statement. Progression principle of. The concept that a lower priced property will be worth more in a higher priced neighborhood than it would in a neighborhood of comparable properties. See also the principle of regression. Progressive tax. A tax schedule that places more of the payment burden on those with greater ability to pay. See also regressive tax. Project enhancement. The increase in a property's market value in anticipation of a public project requiring condemnation action. The property owner cannot be compensated for project enhancement, and in some jurisdictions, measurable project enhancement is an offset against the condemnation award. Uniform appraisal standards for federal land acquisitions. See also benefits. Projection. A prediction of the future that is an extension of current and historical trends. Projection period. A presumed period of ownership. A period of time over which expected net operating income is forecast for purposes of analysis and valuation. Promissory note. A written agreement between a lender and a borrower whereby the borrower agrees to repay a loan plus interest under conditions set forth in the agreement. Property. Something tangible or intangible to which its owner has legal title. See also personal property and real property. Property brief. A description of a property for sale complete with details and pictures in a form suitable for presentation to a prospective buyer. Property class. In accounting, a category for property under the Modified Accelerated Cost Recovery System. The acronym is MACRS. It generally determines the depreciation method and recovery period. Property flipping. The purchase and resale of property within a short time frame. Property Improvement Program. The acronym is PIP. See Product Improvement Program, PIP. Property line. The boundary between two parcels of land or between a property and a traveled way. For instance, a street or alley. Property model. A shortcut formula to DCF analysis that converts a yield rate into a capitalization rate given certain specific patterns of income and a change in value over a projection period. Property residual technique. A capitalization technique in which the net operating income is attributed to the property as a whole, not to separate land and building components. In yield capitalization, the present value of the income stream is computed and added to the present value of the reversion at the projected termination of the investment. Page 179. Property rights. An enforceable legal claim to title of or interest in property. See also personal property and real property. Property rights adjustment. An adjustment made to the indicated property value if the value of the property is not at market occupancy or market rent. Property tax. Any tax that is imposed on a person on account of their ownership or possession of property and is measured by the number of units, the value or some presumptive evidence of number of units or value of such property. Note, this tax is generally but not necessarily intended to be a direct proportional ad valorem tax, IAAO. Property tax base. The assessed value of all property within a designated area. For instance, an assessment or tax district. Property tax levy. The total amount of money to be raised in a taxing jurisdiction from the property tax as set forth in the budget of a taxing jurisdiction. Often also used as a synonym for the millage rate for an individual property. Property yield. The dollar return on the entire property from all sources. For instance, the annual net operating income, including any gain or loss in the original property investment at termination. Property yield rate. The acronym is capital Y over O. See overall yield rate. Y over O. Proprietary data. Data compiled by market research services, generally available for a fee, in contrast to published data accessible to the public. Proprietary lease. A type of lease given to tenant shareholders in a cooperative apartment corporation. In such a venture, the tenant purchases a specific number of shares of stock to obtain possession of an apartment and makes monthly payments to the corporation to cover his or her pro rata share of operating expenses and debt service. Pro rata share. Number one, a share of a fund or deposit that is divided or distributed proportionally. Pro rata share number two, a share of a burden or obligation that is divided proportionally For instance, a tenant in a multi-tenant building or development may be required to pay a pro rata share of the building's operating expenses based on the number of square feet the tenant occupies. In a shopping center, the tenant's share of operating costs is often stated as a fraction, with the gross leasable area of the tenant's premises as the numerator and the gross leasable area or gross leased area of the entire shopping center as the denominator. Pro rata share number 3. The share of a trade area that a retail facility is likely to capture assumes that capture is a function of proprietary size as a proportion of the overall inventory of competitive space in the trade area. For instance, that the facility captures a fair share of the trade area. See also market share. Prorate. To allocate periodic expenses, for instance, property taxes and interest, between the buyer and seller based on the closing date. Prospective market value as completed and as stabilized. A prospective market value may be appropriate for the valuation of a property interest related to a credit decision for a proposed development or renovation project. According to USPAP, an appraisal with a prospective market value reflects an effective date that is subsequent to the date of the appraisal report. Prospective value opinions are intended to reflect the current expectations and perceptions of market participants based on available data. 2 prospective value opinions may be required to reflect the time frame during which development, construction, and occupancy will occur. The prospective market value as completed reflects the property's market value as of the time that development is expected to be completed. The prospective market value as stabilized reflects the property's market value as of the time the property is projected to achieve stabilized occupancy. For an income-producing property, stabilized occupancy is the occupancy level that a property is expected to achieve after the property is exposed to the market for lease over a reasonable period of time and at comparable terms and conditions to other similar properties. See USPAP Statement 4 and Advisory Opinion 17. Interagency Appraisal and Evaluation Guidelines. End of page.